So there have been some pretty important pronouncements, or maybe not, from DeepSeek AI and also from Alibaba. And the DeepSeek one came out some time ago. Alibaba's was actually this week. But it had a big impact on the AI trade, and we're going to talk about that a little bit today on Open Interest. Hello everybody and welcome. I'm Mike Coe. Welcome to Open Interest. We are going to be joined very shortly, if we can work out some technical bugs, by my good friend and colleague, Professor Mark Guthner of Rutgers, who has worked out some stuff in terms of the valuation of NVIDIA, net of the announcements by DeepSeek AI and Alibaba. Before we get to that, and this is just a general sort of comment that I thought I would make, because one of the other big bits of news this week was, of course, the tragic crash that took place in Washington, D.C. over the Potomac, when a military Sikorsky H-60, sometimes referred to as a Black Hawk, for the Navy, sometimes referred to as a Seahawk, crashed into a CRJ-7, which is a regional jet, American Airlines 5342, that had originated in Wichita, Kansas, and was just moments away from landing at Washington, D.C.'s Ronald Reagan.
I see Mike on VMAX.
So a couple things I wanted to mention about that. Some of you may or may not know I'm a little bit of an aviation buff, and because of that, I tend to follow a couple aviators who operate what I think are very good YouTube channels. And the reason I mention this is because one of the differences that a format like this one, so new media, if we want to call it that, versus sort of traditional media sources of magazines, newspapers, and television stations, is that these sort of one-off YouTube channels are often, basically the hobby. It could be an avocation or a vocation of enthusiasts and sometimes experts. So there are two that I highly recommend if you're interested in learning a little bit more about that. Why would I bother to recommend that? Well, the principal reason for this is that, in social media posts, I'm seeing some sort of political traffic going back and forth, with a lot of blame casting going on already. And so those two YouTube channels are Blanco Lirio, Blanco Lirio, B-L-A-N-C-O-L-I-R-I-O. Blanco Lirio is operated by a guy named Juan Brown. Juan Brown is a commercial airline pilot. He lives in Northern California, not where I live. I think it's closer up to the Lake Tahoe area. He is also a military pilot. My understanding is I think he flies or flew C-130s, as well as the 777 commercially. And he does a lot of exceptionally good work, in my view, outlining a lot of the nuances of situations like this, and including this one. And so for those of you who are interested in learning a little bit more, rather than tuning into sort of a traditional media source where hopefully the anchors will bring in somebody who's theoretically an expert on the topic, you can actually get it from somebody who has flown military aircraft at night, has used phosphorus night goggles, is familiar with ILS precision approaches into busy commercial airports, is a commercial airline pilot, has studied numerous incidents, crashes, and so on, has reviewed all of the ATC data, as well as following everything on FlightAware, knows the paths that the helicopters that are traversing from one military base in the DC area to another would normally be following. And because of that, is able to describe how all of the holes in the Swiss cheese, as they often will say in situations like this, could possibly have lined up. There's something else, which I think is just worth mentioning, and it'll probably get a lot more play over the course of the coming days. And that is that although this is the first really serious airline crash that's taken place in the United States since the Colgan Air icing incident that took place near Buffalo, New York in 2009, and you're probably beginning to gather that I am a little bit of an aviation buff, that I happen to have a lot of this stuff sort of at the tips of my fingers. But there have also been a number of other close calls that have taken place. There was one at Austin Bergstrom. I used to live in Austin, but relatively recently there was a very close call there between, I believe it was a FedEx cargo plane and a commercial aircraft, and there have been several others. In addition to that, some commercial airline pilots have referred to close calls with helos in and around the Ronald Reagan Airport in D.C. So I just wanted to throw that out there. So Blanco Lirio, Juan Brown, and Hoover operates this another one called Pilot Debrief. Both of these guys have hundreds of thousands of followers. And Blanco Lirio is also very interesting because one of the things he does is he takes his private airplanes up and he photographs and videos the reservoirs in Northern California, which, of course, water in California is a big deal. So if that is also of interest to you, whether the reservoirs are full and whether they're operating their spillways and when they are empty and just sort of that kind of thing, I think it's very interesting. So those are two channels. I don't know these guys. They don't know me. But they do great work. And I think if this is a topic that is of interest to you and you want to learn more about it, I highly recommend them. Okay. So with that, I don't know whether we have Mark with us or not. If we don't have Mark with us just yet, I figured I would also bring in one other quick issue, which is, oh, there he is.
Oh,
Professor
hello. Let me
Mark.
just get my camera adjusted here a little bit. Okay.
How are you, sir? Good to see you, as always.
I am terrific, and I'm happy to see that our super cold weather is over now. Those single-digit Fahrenheit numbers are no fun.
Yeah. So it looks like you are in your office at Rutgers, actually, judging by your backdrop. So
Yes.
perhaps some of your students will be interrupting us if this is your normal office hours. But for people who are viewing this, we were very interested in getting your insight. So I wanted to just bring this up. So we had this week the beginning of the Lunar New Year. The Lunar New Year, for those who don't know, is the largest traditional holiday that takes place in China. It is, in terms of an official government-recognized holiday, I think they basically celebrate it for a week. But informally, it is often sort of a series of celebrations that lasts all the way through something called Lantern Day, which is going to be taking place, actually, I think, on the 23rd of February, if memory serves. Why do I bring this up? Because the Lunar New Year in China, in addition to being an important traditional holiday, many believe, who subscribe to this, that it sets the tone for the year. This year is the year of the snake. The snake is thought to be intelligent and cunning. And it's interesting to me, maybe some Chinese people would think it was fortuitous, that both DeepSeek AI and Alibaba would both make announcements that suggest they have AI models which are as good or possibly better than large language models like ChatGPT. And, more than that, that they were able to accomplish all of this despite the import restrictions in China, the export restrictions from the United States of certain critical bits of technology, including the most powerful NVIDIA GPUs that are typically being used by the hyperscalers for these machine learning projects. And also at significantly, therefore, lower costs, since much of the cost is coming from these GPUs. DeepSeek initially made a claim that they were able to do this for about $6 million, which is only about 20% more than it would cost to build a new McDonald's. So, that is quite a remarkable claim, and a little bit hard to believe. Alibaba's resources, of course, are substantially larger, so developments on their side are somewhat easier to believe. Nevertheless, the fact that they seem to have caught up so quickly, or, as they claim, even surpassed, seems quite dubious. So I wanted to just make two quick points before we get to Mark, who has some slides for us on how we should think about the evaluation of NVIDIA in the context of these developments. And the first is that for those of you who have not downloaded the DeepSeek AI app or use the installed version on your PC, we have, and it's not terrific. So I will leave it with that. It definitely seems to have some material flaws, more of them than more recent versions. So I'm a paying user of Chat GPT, so I don't have the free version. Gemini, Grok, and now we are experimenting. I have not been experimenting, but our senior producer Jay, who is more of a technologist than I, has been experimenting with the DeepSeek AI application. And by the way, his background is in technology. He was the CTO of a $10 billion hedge fund for more than a decade. So this is somebody who knows whereof he speaks, not necessarily in the AI space, but he is a technologist. And so we have some serious questions about its capabilities. Nevertheless, as is often the case, we saw this when Japan would replicate, or try to replicate, then successfully replicate, and ultimately surpass. For example, cars in the United States, Korea did the same. We've seen a lot of the same behavior out of China. It is reasonable to believe that whatever flaws these things have, they are catching up, and they may catch up quite quickly. So, Mark, what is your take on all of this? Should investors in NVIDIA be concerned? Should investors in Vistra Energy be concerned? That's a sector that got hit as hard or harder than. What are your thoughts?
Both should be a little concerned if, in fact, their algorithm, however it works, is much less demanding in terms of computational needs, because that not only did they make it, or they claim to have made it at a nominal cost compared to what has been spent in the U.S. to build it, Chat GPT and competing items. They also claim that it is not nearly as demanding in terms of computational needs, and so they could get away with having much smaller server farms and data centers to run their applications. And so that's why NVIDIA went through a swoon, because really the approach of the industry is they've written some software and it's like, okay, we need lots of horsepower. So they're just, throwing the biggest engine that can hand at the industry. One of the things that I always thought is, they'll figure out a way to do it in a more efficient computational manner. And I think that could happen faster than most people think, because everything I keep reading is people that are using AI to help them write code. It says it writes pretty good code. And also they can show them some code, and the AI algorithms will show them a way to optimize or improve their code. Maybe point out some errors to it. So I would not be surprised to see some advancements as we go to Rev 2, Rev 3, Rev 4, Rev 5, that we get better and faster. And, it's kind of the way things go in tech. Throw enough smart people at it and a few bucks, and sometimes a lot of bucks, you can make a leap forward. And so I was concerned. I saw that and I said, boy, that really changes the playing field if this is true. And of course, the big word here is if. Now, I saw an article on the website today saying that maybe they're telling a little bit of a fib here in terms of computational demand, because I was listening to a podcast on the way to work, and they were talking about that maybe they were laundering the NVIDIA chips through Singapore, because the sales to Singapore had skyrocketed in the past, I don't know, I forget what they said, 3 or 4 months, 6 months, something like that. So maybe they were getting around trade restrictions by running them through a shell company over there, and so maybe they really do need all that horsepower, and they just wrote their own code, which is fine. Uh, did they borrow somebody else's code to build their model? Could have. And so time will go on. I think we don't really know. We have a lot of assertions, but we don't know a lot of facts at this stage. But it always gets me to think about NVIDIA. I teach a class in valuation, and I think the story around NVIDIA is very similar to the one around Tesla. And so that's why I decided in our talk today that we'd talk about valuation of NVIDIA. And because I think it's a very interesting story because we talk a lot about the products, but how do we? One of the things I talk about in my class is in valuation you have a story and you have the numbers, and the numbers in the story have to align in order to put together a decent estimate of intrinsic value of a company in a stock. I see you're making a
we should.
joke.
Well, Domodoran, who's sometimes referred to, what do they call him? The dean of valuation. He is another business school professor like yourself. And one of the things I've always liked about his work is that he indeed does help people avoid the notion of simply taking a look at an income statement, taking a look at a cash flow statement, taking a look at the balance sheet, and assuming that simply with those numbers you are going to be able to divine basically the value of a business going forward. And in fact, this is now we're going to do this in almost every instance. In fact, I think very recently, maybe even on the last live stream, I was talking, in fact, about Tesla. And one of the things that I had pointed out was that the enterprise value of Tesla was greater than that of a whole slew of the world's largest automakers combined. Now, when I do something like that, I should quickly point out that that's not because I think that Tesla is the functional equivalent of Volkswagen or Mercedes or Toyota or Ford or General Motors. But I do want people to think about the value of the business in terms of some multiple of what they're going to earn from the products that they do sell. And if one of those things is cars, then one of the things we could obviously contemplate is, what if they sold all the cars in the world? What then? And obviously they have a lot more technology than that. They have robotics. They have all of the full self-driving technology, which they offer much more in a much more cost-effective manner, arguably, than Waymo, and in a more transferable manner than Waymo does. But I think it's really important to think in a bigger way about what a business represents than simply taking a look at some history of their financial statements.
Right. I like his work a lot. I've had the pleasure of seeing him speak, and he's a very entertaining and captivating speaker, and somebody to try to strive to replicate a little bit. At least I do, because I use his book, by the way, in my classes. So I've read a lot of his work.
Noticed your low. I was just taking a look at my return. I noticed your lower third says Mark Guthner CPA. So just so everybody who's looking at this is aware, the appropriate three letters that should be coming after Mark Guthner's name is CFA, as in Chartered Financial Analyst. In addition to whatever other fancy letters follow your name, or the fancy ones that precede it, Professor. In any case, you had some slides for us, and actually before we get to that, I just wanted things to think about with respect to China. Maybe someone can share my screen really quickly. During this week, one of the things that came up repeatedly from people that I speak to who are investors in Vistra, in NVIDIA, in the space in general, was that we have had a number of instances over the course of the last several years where things that have come out of China were not always exactly what they seemed. And perhaps the best known example of this was when a zoo, not being able to access any pandas, figured that they might be able to paint some dogs to look like them. And then people would come to the zoo and see the pandas. They eventually, of course, had to come clean. And it isn't just pandas, by the way. Basically, any animal that everybody's really interested in seeing and is often very rare, like pandas and also tigers. They've done the same with tigers. I have to say that the tigers were significantly less convincing even than the painted dog pandas were.
That was very nice. Yeah, beautiful.
And by the way, I will say one final thing. I mean, the dogs are cute enough, you know. This is probably going to tempt people to do stupid things to their dogs. I will also add one other thing, which is that when senior producer Jay was doing some experiments with DeepSeek, one of the curious things, other than many of the errors that he uncovered, and there were several, was that I think on more than one occasion, it identified itself as ChatGPT. So I thought that was rather interesting. Anyway, we will leave the dog pandas and DeepSeek's own comments about itself to the side for a moment, and we'll be very interested to see your walkthrough on NVIDIA's valuation before we get to some questions.
All right, so I'm going to walk through a technique that we cover in class, and it's to kind of use a variable growth rate. It's called a variable growth rate DCF analysis, discounted cash flows. So intrinsic value is, of course, the present value of all the cash flows that an investor can sweep out of a company. So if you look at that at the company-wide level, that's enterprise value. If you see just the cash flows going to the equity holders and not the debt holders, that's the market capitalization of the company. That's the thing that more people look at. My favorite way of looking at companies is through enterprise value. Turns out, since NVIDIA doesn't have any debt, their market cap and enterprise value are essentially the same number. But I wanted to walk through an exercise here. And the first thing I like to do when I look at a company is try to come up and model do a model valuation and try to put inputs into the model that will give me the price I see in the marketplace. We do that in options. We call that figuring out the implied volatility. So I'm thinking in terms of implied growth rates and implied costs of capital. This is multidimensional, so it's a bit more difficult. So what I have here is the assumptions that I use in the model that I'm going to show you on the next page. Under the year 2024, we have the number of shares outstanding, which is almost 24 billion. The equity value is about $3.2 billion. There's no debt. Trillion. Sorry, 3.2 trillion. They got about 26 billion of cash on the books. So enterprise value is equal to the market cap plus the debt minus the cash. So this is what the market is saying the entire company is worth. And revenue for the last 12 months in 2024 was about $113 billion. It's really remarkable when you see how fast that grew in the past, 4 or 5 years. And then under 2025 to 2032, these are some assumptions that I'm working with. Now, one thing I need in doing evaluation is I need to know what my expected return is in order to calculate or get a discount rate to take the cash flows that I'm going to generate and then bring them back to today's value. So I use long-term treasury yields, which are about 450 right now, and I'm expecting them to go up 1% over the next few years. I think we're not going down. A lot of people are hoping lots of Fed rate cuts and interest and inflation goes down, and there'll be a big drop in rates. I don't think that's what's going to happen. Then there's a risk premium for being in a risky asset like a stock versus treasury bills. And then there's a sensitivity to that risk premium. We call that beta. And if we put that together, we can get a cost of equity. We apply a formula. I'm not going to share the formula here, but a dollar today is worth a dollar 15.54 a year from now. And so I think the cost of capital will go down a little bit as time goes by because the company's business will become less risky as time goes on. So that's sort of the first thing I think about in terms of how I'm going to value the cash flows. Then if I pop into the model a revenue growth rate of 65% this year, and then going down slowly to 7% in 10 years, that's an assumption I'm making in the model. Why am I using 7% as sort of a long-term growth rate? Well, if we go back and look at the last 50 years, the growth rate, compounded annual growth rate in sales of the semiconductor industry is about 7%. So after they get through this huge growth period, they're going to start to look, and at least that's the presumption I'm making here, it's going to look like in every other semiconductor stock out there. Now, their operating margins are last year, so some people might refer to that as EBIT, earnings before interest and taxes, is about 63%. That's what they did last year. And then if we look at the industry, and just before I came on, I said, well, what if we use Broadcom? Broadcom is a big diversified semiconductor company. Their margin's about 30%. And then the effective tax rate, and I don't know how NVIDIA is able to get its effective tax rate down to 13%, but it's been that way for a number of years. Even though the statutory tax rate at the federal level is 21%, and of course, they are located in the great state of California, which loves the income tax. And I'm sure they're paying a high rate there, and the statutory rate there is 13. So I just assumed that, okay, it's going to get to 34%. They must be getting some kind of tax breaks for special regulation. I couldn't find anything out to find out what that might be. And then I assume that since they're really a design house, they don't need to make huge reinvestments. Whatever they have in depreciation, they are gonna pay out. So those are the assumptions that I make going forward. And then on the next page, I show what that means for cash flows. So the revenue next year would be $186 million if it grew by 65%. And you can see I have a revenue growth rate next to that number so people can see what I'm assuming, and it's eventually working its way down to 7%. One of the things you should look at is it's suggesting if those numbers are right, that in 2034, the company is going to have $2.2 trillion worth of revenue. I find that very hard to believe, but we're going to get to that in a minute. And so then I have their operating margins that over time will fall from 63 to 29%. And it makes sense that would happen as one is the demand for their chips will level out at some point. There's going to be competition in that space. Other people are going to be making competitive products. Nobody gets to make abnormal profits forever in a free market system. And then you see I've got I'm able to calculate the EBIT, which is we multiply through by the operating margin. I subtract some tax, and then I get a pre-tax number. Now I'm going to discount those numbers at some rate, and that's what's over on the far right-hand side. So the present value of the free cash flow that they'll get out of 2025 is $88 million. Then the following year would be $111 million, and then $133, and so on. So that gives me what the value of the cash flows
Billions,
that the
yes.
company's going to grab going forward. You got a question?
I was just going to say, you mean billions, not millions.
Billions. Okay, sorry, I'm getting my T's and my B's and my C's mixed up here today. So, if I figure out the terminal value of this company 10 years from now, the company would probably be worth, assuming these numbers of $6.8 trillion. So if you were an investor and the company paid a dividend, they would be paying the dividends of those cash flows that I have, plus you could sell the company in 10 years. If we put that all together, we get the current market cap of about $3.2 trillion. And if we go convert that back into shares, we get to 127 bucks. And I think the stock is trading about 125. So this is my picture or my interpretation of what I think the average, Wall Street analyst or buy side analyst thinks the company might do and its ability to just generate cash flows and what that might be worth. So then, okay, the next question is well, does the streets numbers make any sense? Let's go test some of those assumptions. So if we go to the next page, this gives us a little idea of who's been spending what on data centers. So in 2024, I found this over at Yahoo in an article they did at the end of last year that Microsoft spent 46 billion, Meta spent 27, Google spent 33, Amazon spent 19 billion, and the building out of their data centers. Now there's other people that compete in this market. There's people that are dedicated to this, like Equinix, Digital Realty. They're just companies that build data centers and let everybody use the hardware in there to do what they're doing. Now there are others as well that have these, but these are kind of the big guys in the space. So it appears from what I could tell that the whole industry spent about $330 billion in 2024. That's what Gartner published. And then they think that's going to go up by 23% next year. So that they have an entirely different number than what I think the stock is implying, that the growth rate will be. So they're saying there's still going to be lots of growth, 23%, very fast. If you have a business growing 23% per year compounded, you're going to double the size of your business every 3.25 years, 3.5 years, something like that. That's fast growth. Where does the money really get spent? It really gets spent on servers, and then you need buildings to house the servers. And of course, in those buildings, they have huge power management systems, huge air conditioning systems. So most of the money is going to the tech firms and of the winners in the tech space. Most of it's going to NVIDIA. One of the things I couldn't figure out is how much these companies are going to spend to get their own power plants. Now, this is why power companies took a beating when the news came out about DeepSeek, because Microsoft is in the process of trying to get 3 nuclear power plants dedicated to supplying electric power to their data centers. And, it's hard to believe, but because we all have our computers and they use a little bit of power. Typical laptop's going to use 125 or 150 watts of power. But these data centers use as much power as a steel mill. All those machines are running. They're all running super fast. They're using a lot of electricity to crunch all these numbers, because these are multiple story buildings, and the idea is to get as many machines packed in as tight a space as possible to be as efficient as possible. So what the industry is going to spend in terms of getting dedicated power is in question. So I kind of say this is the story of what's going on. I figured out some numbers, what the world is thinking in terms of how do you get to the current market price, to a $3.2 trillion valuation of NVIDIA. But what's happening on the ground, at least this is what's going on right now. So if we pop up to the next page, and just make the change that we're going to have the slower growth rate. It's going to grow at 23% and eventually move its way down to 7%. So, the sales over at NVIDIA in 10 years' time is going to get to be close to $500 billion. It's about a quarter the size. And I'm going to assume the margins are going to stay the same. Or the margin scenario I had would stay the same. So when I crunch the numbers this way, I see that the total value of the firm is about $462 billion. And that translates into a share price of about $34. So why the discrepancy? Well, the discrepancy is very large because what I think when I use these numbers, I'm only looking at the AI space, right? But what are the other things that people are looking at? Well, self-driving cars. Every self-driving cars is going to have at least one of their microprocessors in it. Maybe it'll have more than one. I don't know. I don't know what it takes to let your car drive by itself. And they're going to be the winner in that space because everybody's using their chips in their self-driving cars. Another area that will use their chips is the robotics. And so we see all these nice stories of we're going to have our own personal assistants that are robots that'll cook our meals and wash the clothes for us and stuff like that. That might be coming. I don't know that it's coming that soon. I would think that self-driving cars is coming way before the robots do. I think this is
on
what
that front. I would interrupt and just quickly. I'm sorry to interrupt, but I would say that
please do.
Elon Musk has. I mean, he has been ambitious with some of his predictions on when they would be releasing innovative new technologies, including full self-driving. So, level 3 for autonomous driving, for example. The predictions usually were ambitious, shall we say, in terms of what the anticipated release dates were. But they're building robots, and according to him, that these things are going to be marketable at purchasable prices, within 5 years. And his further prediction is that for those that can afford them, it's entirely possible that there will be folks who own more than one. So that's a huge potential source of demand. And I have some other thoughts on this, but I'll let you continue. I just wanted to.
Yeah, it would take. I think it takes a lot of thought, a lot of work, because you think about the number of people that are going to buy these things. It's probably the top, 20 income earners on the planet. But anyway, I don't want to get bogged down in that part of the conversation. The point of this is that when people are valuing these super fast growth companies, there's a tendency to just take a straight edge and say whatever trend is in place is just going to keep going and going and going. And that's what gets us to overpay for a stock or any asset because we think, people overpay for gold because, inflation's going to go forever. But, everything in life is cyclical. You traded oil back in 2008. Price of oil went from like $70 to $140 in about, 4 or 5 months time. Everybody thought it was going to 200 and higher because there's a tendency for people to just extend whatever trend is in place and take that out forever. The other thing that is very difficult with these fast growth companies is how are they going to evolve with the world? So if we go to the next chart, so as I mentioned here, companies tend to go through a life cycle. They've got a startup phase, they got a growth phase, they got a hyper growth phase. So I'd say NVIDIA's in the hyper growth phase now. But that's going to definitely slow down for the data centers because how much computational power do you need? if the industry, let's say, commits $1 trillion to building out data centers and developing and improving the software, if you want a 10% return on that, you're going to need to make a profit of $100 billion. And if you work backwards, and if you had a 10% profit margin, you're going to need $1 trillion in revenue every year. So that's a big ask to look at that trend for so long. All these companies offer, as you mentioned earlier, a free version of their software, and then something that's better with that is a premium product that you pay a subscription price for. I think somebody will probably come out with some kind of advertising model. I'm sure that you're going to have to look at advertisements while you play with your little AI bot, or maybe the AI bot's going to start talking to you and tell you to buy you some Coca-Cola while you're working on this very difficult problem. That kind of thing. So now, what I think is interesting is a lot of companies go through a growth phase and then they plateau and they fall. So companies that come to mind there are Kodak, for example. They ruled the world. At one time, Kodak was one of the most valuable companies in the United States. And then once the digital camera came out, they were toast. There's BlackBerry. There was a time when they owned the smartphone market. And 2 or 3 years after Apple came out with their iPhone, they were out of business. They couldn't make that transition. Now, I'm not saying that's what necessarily could happen here, but I expect the path I see for NVIDIA is that they're going through hyper growth now. It's going to slow down, and then there'll be another demand item for it. So it'll be the autonomous driving, or the robotics, or some other industry that I'm not aware of that hasn't really come up here. And then we'll extend onto that green line. And whatever cycle we're going through, we'll get another leg up. And it's not uncommon for that to happen. That's what went on with Microsoft. Microsoft was started very small, hyper grew for 10, 15 years, and then flattened out, particularly during the Ballmer years. And then they got into the data center business with Azure, and that reignited all kinds of businesses for them. And so they got to go from about 10 years where they really didn't grow. They were still very profitable, but they didn't grow. And then they got into cloud services, and they were off to the races once again. So I think these things for autonomous driving and robotics will do that for NVIDIA. And that probably explains the difference between of just doing what I did was value the AI business without having an idea of what these other things are doing. That's what I think the market is doing. What I think the market's not taking into account is the potential for some competition down the road. So DeepSeek was the first one that came in and say, hey, wait a minute, maybe there is a way to have more efficient code that doesn't demand so much horsepower. And then I was thinking just this morning, as I was thinking about what I'd talk about today with you, is quantum computing. So this whole idea around quantum computing, that they can solve a problem in 5 seconds that normally takes, a millennia or longer or 1,000 years to do. That's what the claims are, right? That we read about. Then if quantum computing works, then we're going to find out that all these data centers are going to become obsolete pretty fast, because you're going to have one room with a big quantum computer in it, and everybody's going to ask it all the questions, and it's going to provide wonderful answers. So nobody's thinking about that. They like to look at quantum computers and say, well, it's over for Bitcoin because now they'll be hacking Bitcoin. I think they're going to hack my phone first, where I only have to type in 4 or 6 numbers in order to get into my phone. Or if I was doing that, I would probably want to hack into some central bank someplace. Now, I'm not going to do that. So, authorities listening to our show, I'm just saying that if you had that why horse around with Bitcoin when there's many millions of more trillions of dollars out there to go horse around with than a couple $1 trillion worth of Bitcoin. So I got to thinking about that maybe that's the kind of thing that represents a long-term threat, but small one, because I don't, who knows if it really works on a practical level. It might work in a theoretical lab, but so time will tell. But that's why the share price fell. So on our next chart, we had just the reaction of people not knowing what might happen. Okay, wow, did they really just build a model for $6 or $7 million? It's entirely possible that they, like I said, they copied big chunks of somebody else's model. I don't know. I guess people would be able to figure it out because it's open source. Whereas I understand OpenAI's product, ChatGPT, is not open source. What I think is really interesting here is just throwing a little pebble in the pond and seeing the ripple it costs. The share price fell from, when I put down here, $150 to about $124. Since there's about 25 billion shares outstanding, that's $650 billion of value. And just to give you an idea of how big that is, well, that's the market cap of Visa, for example, a huge company, just by changing the growth potential in the business. And this is the hardest part about investing in super growth stocks, because if there's a hiccup, the value of your company can change pretty radically, or at least the market price could change pretty radically as people try to respond to it and figure it out. We talked about this story in class yesterday, and to me, I don't really know what the truth is. I know there's a bunch of stories out there. The quality of the information, I don't know, but it all has an impact. And bringing this back to, and that's why I bring it back to valuing Tesla, because as you pointed out, Tesla's worth more than the rest of the industry combined, right? If we put together the top 10, something like that. Well, where are they getting that valuation from? Well, it's because they run the largest neural network on the planet. They're going to do something with that. And I think people are trying to figure out that. They might put Uber and Lyft out of business by simply taking their cars, putting them on the road, and being robo-taxis, which is a multi-trillion-dollar business. So that's what people, and if you listen to Ron Barron, who's one of their largest and earliest shareholders, he talks about this, and he doesn't, it's interesting, he doesn't really talk about a number, but he just knows it's going to be big. And he's got a very long investment time horizon for his investment, which is remarkable because he's up in his years himself. But
his investors might be younger than he is.
Yes, that's true. They gotta hope that whoever takes hold for him has the conviction to hold on to the Tesla stock and not get scared out of the position on some downdraft. So that's why I say it's very hard to value Tesla, and there's this constant drumbeat that Tesla is overvalued because they can't see what he might do with all the other technology things that he has going on at Tesla. So those are the thoughts that I had around this.
Well, I appreciate that. First of all, for those who watch the live stream, you'll know that ahead of earnings, which they announced after the close on Wednesday, the 29th, and their numbers came in a little bit light. The stock did not, I highlighted that I thought that there was a risk that the stock could trade lower on potentially disappointing numbers. We did see some margin compression, so if you're looking at them as a car company, then it would be realistic to assume that, given their already fairly heady valuation, that the stock might have traded off on that news. In addition to DeepSeek and Alibaba making some rather interesting announcements this week, something else interesting happened on Wednesday before they made that announcement from Tesla. They released an obviously produced video of Teslas coming off the Fremont assembly line and driving themselves to the loading docks.
Oh.
And this is not a coincidence. I actually created a snip from Young Frankenstein when the monster is going crazy and Frau Blücher picks up her violin and starts to play it. I know what the monster likes, and it starts trying to catch butterflies in the air and is completely calmed down and happy. This is one of the things that often happens with Tesla, is that Elon or the company, or maybe other investors, will remind people that before you get too panicked about the numbers, you're actually reaching for those butterflies. That's what you're doing. And they have a tendency to time their announcements about what they are going to do, what they will do, what they can do, in and around the time that they are also releasing information on what they are currently doing. Because if all you thought about is what they're currently doing, then you would end up falling into the same valuation trap. And that's the reason why I didn't suggest shorting Tesla ahead of the number, but I did see some potential downside risk. But I saw that produced video of Teslas driving themselves ahead of the number, and I thought, the number's probably not going to be that great then, and probably people aren't going to care because the Teslas are driving themselves. Isn't that wonderful? I happen to have on my screen right now, the picture that I happen to have here is an inventory versus a supply chain chart. This is a diagram that is often used for demographics. So they'll just talk about the demographics of a population, and how you sort of have call it the boomers, for example, in the U.S. population, sort of working its way through the system. And I was speaking to a former colleague, my former boss, actually. I'll mention his name because he keeps using this as an analogy for what's going on with NVIDIA. Not that this is going on, but that it's a risk. And that is that what we're seeing is this big surge, this big bulge. It's called pigs in a python that's going through the system. A couple of things I wanted to just throw out there as we think about this. And I was having a conversation about this earlier. The first thing is that, to your point, obviously, the utility for these GPUs and whatever subsequent technology the company, which is well in the lead right now, might develop, is going to be exceptionally broad, whether that's for data centers or other smaller but more common use cases. The second thing is that even if the GPU that they developed was the end-all be-all, so let's just assume that they came out with a GPU and everybody said, that's the bomb, no new development is needed. I remember reading a story, I can't remember the name of the person who said it, and maybe one of the crack production staff will come up with it, but there was somebody who once said at the beginning of the Industrial Revolution, that's it, everything that can be invented has been invented, which was obviously one of the sillier things that had ever been said. And maybe it would be possible to imagine that somebody who had grown up without electricity and with horse-drawn wagons suddenly seeing automobiles and airplanes would believe that, things that were not within the scope of his imagination were suddenly a day-to-day reality. That's it. Nothing bigger or better can happen. The fact is that even if you had the ultimate GPU, they do decay. So these machines wear out over the course of time and would need to be replaced. So even if you needed stasis just to maintain what you currently have, these things will end up in some kind of a cycle. But I would actually offer something else for people to contemplate, which is that it would have been thought of as quite ambitious for us to be talking about general AI not that long ago, or even useful AI not that long ago. For us to be talking about humanoid robots that could take on the responsibilities of humans in many instances, self-driving cars. All of these things were products of science fiction only a decade ago.
Mm-hmm.
But if you're wondering, where does this ultimately go? How far, can it go? How ambitious can one be? I would ask this, and this was basically the topic of my conversation before we went live, which is omniscient and omnipotent. That's the terminal end. All-knowing and all-powerful.
Mm-hmm.
We're a long way off from that. So the question that folks should probably be asking themselves is, well, I'm sure some are probably already asking themselves whether they want something that is omniscient or all-powerful. And I think those who are concerned about AI, this is one of the concerns that they sometimes discuss. But the fact is that somebody's going to be building that technology. And omniscient and omnipotent, it being infinite, seems like an impossible goal. So the growth in technology that supports artificial intelligence, that supports robotics, that supports new technologies, whatever they may be, is very difficult to conceive of. And quantum computing, of course, has some other interesting ideas around it. And some of those capabilities are also very hard for us to conceive or even discuss. We don't need to fall into that conversation right now. But I just figured I would offer that. My biggest pigs in a python concern where NVIDIA is involved is actually not so much about whether we're not going to have demand for new technology that is involved in the AI space. We will. It's just whether or not, as you previously mentioned, they're going to find some competition sooner or later. And as that competition develops, they may end up losing some market share, losing some margin, or both. And I think that's one possibility. I have unusual whales up here. We're not going to get into it too much today. We will probably try to get to this a little bit more on Monday and next Wednesday, where we can go into some specific options trades. But one of the things that I think is really interesting here, and I just happened to pull up NVIDIA and take a look at some of, this just screened some of today's flows to see what was going on. And they have some pretty cool tools for this. One of the reasons I wanted to point it out, and by the way, they keep track of, when they look at, this is something that my Bloomberg does not do. I'm going to show you this really quickly. So,
is this an app you have or a website? What is this, Mike?
Yeah. So Unusual Whales, and they're they're doing some really interesting stuff. Creative, it's a bunch of technologists and traders that developed a platform to suit their needs. And when they found something that they wanted to have that they couldn't find in the market, or that they thought was too expensive, and Bloomberg is exceptionally expensive, $3,000 plus a month or whatever it is, so doesn't have utility. But it's not just an issue of utility, really, right? Because so we take a look at NVIDIA, by the way. Take a look at the volume today: 8.3 million calls traded. This is just incredible. 12 million contracts overall. To put things in perspective, folks, the entire options volume in the United States so far today, this is inclusive of all single stocks that have tradable options, ETPs, that was ETFs, ETNs, all of that, plus the indices, is less than 60 million contracts. And NVIDIA is over 12. Wow. That is madness. That is just incredible. So what are people trading? Well, this is just a custom screen that happened to come up. And you can see that. So, and this is one of the things I like about their application, is that it gives you a whole lot of information that you kind of want to have in one place. And by the way, I don't own the company. I only happened to reach out to these guys recently because they also are the ones that are supporting the activity on the equity side and option side too for members of Congress. So when you look at those subversive ETFs, they're not subversive ETFs, which has the Nance ETF and the Cruise ETF, but they are the data supplier to them. And that prompted me to reach out to these guys and say, I want to know you a little bit better and find out what you're doing. And I have only just begun to take a look at what this thing is. But consider this one screen, which is showing you some of the notable activity today. And it does one of the things that we normally have to try to figure out on our own, which is you see that there was a lot of volume. Was it a single big trade or a series of trades? Is it opening? And were they buying those options or selling them? If you look over here, this is what you can see. So the green means that you can figure out that these people were buying these options. And then you say to yourself, oh, these guys have earnings coming up. When is that? Well, when you watch me on the Bloomberg terminal, I'm going back and forth amongst all these functions. So to see what's active in NVIDIA, I will do, and you guys, some of you have actually asked me, can I get a Bloomberg? So this I would look at to see what the most active options were, right? And then I say, oh, wait a minute, I don't want to look at the ones that expire today because that's not meaningful. So then I'll go out a week or so. Because I want to see whether people are making bets that the stock is going to recover. So I do that, but it doesn't really consolidate things up here. And then, oh, wait a minute, when were earnings again? So then I leave this screen and I go to the SERP function because I want to see what the implied moves are and things like that. So I'm bopping back and forth. Well, not here. And why not? Because, check this out. It actually tells you in one spot. So let me do this, see if I can pull this up here. You check this out. So, for example, I'm looking at these options right here, which are the Feb 14th Valentine's Day options, right? And so I'm thinking, all right, well, are those guys going to make a play on earnings? Well, I can see immediately without going to another screen that they're not. Why not? Well, check this out, right? So over here, they say earnings are 26 days away, but these options are expiring in 14 days, right? So you can see that these were bought. You can see approximately what people are paying for them. You can see what the open interest was. Were these things opening? Is there a catalyst coming straight away? Also, the moneyness. So, for example, if you're taking a look at this top line here, you're going to notice that these suckers here, which are expiring in just a month, are 114% out of the money. A place the stock has never been. Probably not that important. Now, on a trade construction basis, with NVIDIA, I've kind of been of the view that in many of these names, we've had this sort of shock to the system. I actually believe it's going to take... Oh, by the way, if you didn't catch what I just said about unusual whales, I think we have a link. Jay, do we have a link in the description of this video to unusual whales? You guys can find it. But yeah. So we have a link to it. You can find that in the description below, but it's pretty slick. There's a lot more there. I think I mentioned that one of the other things they do is you can check the historical implied moves and relate that to the historical realized moves, which is not something that comes up automatically in the Bloomberg function either. So you got a lot more for a whole lot less if you're an options guy. Just figured I'd mention that out. So check them out. So just quickly, I think we are probably going to see what's going on right now. I think it's going to take a little while for these things to sort themselves out. Implied volatility for options right now is really, it's quite high as a result of this. And I don't think we're going to have any firm answers for a little while. Now, what I'm about to say is, and my friend and colleague from CNBC, Carter Worth, he does something called the "You've Been Strangled," which is where he advocates selling strangles on stocks that he think are going to be range bound. I'm not suggesting short strangles for those people who aren't comfortable with the risk, because you're selling a naked upside call, you're selling a naked downside put. But the fact is, near dated premium is pretty elevated. And I don't believe that NVIDIA is going to be hitting, and you can tell me, Mark, if you disagree, I don't think that NVIDIA is going to be hitting new all-time highs anytime soon. I think it's going to have to go probably well through earnings as people try to sift through what's actually happening here. Did DeepSeek access GPUs that they should not have by purchasing them through Singapore? Did they actually create some kind of an innovative technology? How much has been borrowed or stolen? How much of this is real? It's going to take a little while for people to figure that out. And I think it's unlikely that the stock breaches new highs until people sort of begin to take all of this in and digest it. But I also think that we have heard from some of the big hyperscalers that this is not going to curb their spending in the near term. So bracketed by those two realities, the fact that it's probably going to take us a little bit of time to sort this out, and that the big U.S. participants, absent a mechanism to essentially continue to push the envelope of their achievements the way they're doing it right now, I think you kind of have both a measure of support and a measure of resistance. Would you agree with that?
I do.
So,
and if people were stuck and they didn't want to do the strangle, then you've got to go back to the iron condor.
Yes, that's right. So this is one strategy. You could sell strangles. This one happens to expire in how long is this one? This is so March. This is how many days away is this? I should probably know that right offhand. So that's 49 days away. Now, there's one of the reasons why do I like 49 days here? So there's a couple things that I don't think I've discussed this. I want people to think about this though in terms of options. We often will mention that short-dated options, the rate of decay accelerates as expiration approaches, right?
Yeah.
So I know that you've discussed this, Mark. It is also true that most options expire worthless. Now, the reason they expire worthless, by the way, is that don't forget that at least half of those options have to be, functionally, must be out of the money. You know, you're going to have both a call and a put listed, so wherever it is, half of them are probably going to be out of the money. But in addition to that, there was some premium. So this is one of the things to think about. But I want you to think about something else. And that is that really short-dated options, while as a percentage of their own value, they might be decaying really quickly, their value relative to the stock might not be meaningful. So what I mean by that, I know we have to wrap this up very quickly, is that if an option costs, call it 10 cents, it's going to lose all of its value by the end of the week, but 10 cents on a $120 stock is nothing. So going further out in time means that the value of the options relative to the stock, relative to the absolute risk, relative to the strike is greater. There's something else going on here. As people begin to settle in and get some sense of where things are, the implied volatility of these options will also fall. So you're going to have a nice part of the decay curve at 50 days or so, but you also have some vega, which means that as implied volatility falls, so will the value of those options.
Yeah.
So the absolute risk you take when you sell options that are a month and a half out is relative to how much you're collecting is actually, in some cases, a better bet than, say, selling a one-day option. Many people are using one-day options just as a day trading tool. But I want people to think about that. And then if you start to... So because of this, so that you don't have that idiosyncratic risk of a stock price jump that takes place, like that. And by the way, think about this, right? NVIDIA is going to be reporting earnings in 26 days. So if you sell this, you're going to get nice decay. If Vega comes down, you're going to get an even bigger kick. And you're going to have an opportunity to cover this thing, very likely when it's got 25 days left, something like that, and not have to ride it all the way through earnings. So since we've now been going for a little bit over an hour, and this one dragged a little bit because we had some technical difficulties getting Mark with us, and I was kind of rambling on about Blanco Lirio and the pilot debrief, but I would... And And I encourage those of you who are interested in learning more about that disastrous and tragic crash in D.C. to go to those 2 sites. Those guys are really good, and they can give you insights if you are not a pilot, if you're not an aviation buff, and if you don't know much about it, to some of the things that you probably should learn. I encourage you to go to Unusual Whales and see some of the cool stuff that those guys are developing. And from the few conversations I've had with them, they seem like they're an innovative and dynamic and responsive bunch as well. So that definitely deserves a look. And I think that this trade, by the way, Vistra Energy, that one fell whatever 20%. It's gained more than half of it back. I think it's down about 9% from this pre-AI trade crash. So I think that this trade setup actually applies in a couple of those cases. I don't know whether Alibaba is telling the truth. It could be another painted dog panda. I don't know. But I'm willing to take it as a speculative long here. So if you go to the website, if you go to the Options Edge website, I outline a trade on Alibaba. So with all of that, I hope all of you have an excellent weekend. Mark, I hope you have an excellent weekend. Thank you, as always, for joining all of us here. I love to hear your insights. You've been a mentor to me for many years, and I appreciate that. And I hope he's serving as a mentor to you guys. You don't have to go back to school to hear the professor speak. With that, thank you all for watching. Put your questions into the chat, and hopefully we'll get to them in a future video. Have a great weekend.
Trick.